Greetings, traders. Today I wanted to answer a question that I got from a prospective member. It was an interesting question, and I'm sure it's something that a lot of you are thinking about. So I thought that I would go ahead and answer it. Now, I can't give specific advice because I'm not a financial planner, licensed security trader, or anything like that. So I can't give specific advice, but I tried to give, in the answer to the question, as much generic advice as I could based on my own experience, my own interpretation of what the question was. So, as with most questions that I get, it doesn't have all the information that we need. So we're going to do some assumptions, but I think that the result will be pretty good. So, this is the question that was actually asked, and it says, "Dear Sir, I have been employed with the City of Los Angeles Bureau of Engineering for over 20 years. It's time for a change. I'm very good with mathematics and computers. I'm requesting information about training and working as a stock trader, covered call seller, and options trader. I've heard this is a very good business for a self-starter independent worker. I'd like to set up a computer terminal at my home and work from that location, perhaps for another 15 years. I have a physical disability, so many types of work are not possible, and I have over $200,000 bankroll to start. I need guidance and a mentor and a teacher. Please tell me what to do, who to talk to, who to trust. Thank you, Robert." So what we can assume from here is that he's been working for a while. Now, I don't know if he's heading towards retirement. If he's a city employee, he might be getting a pension, so we don't know how much income he needs, but he is in Los Angeles, so he probably needs a decent amount of money per year to live on. And I'm assuming that he wants to trade for a living, and not have to worry about expenses or anything like that, or having to work, because it says that he is considering other types of work. So with his physical disability, trading seems like a good fit, and it seems a good fit for just about anybody. I mean, that's the dream, right? Sitting at home on a computer, work your own hours, push the button a couple times, not really do any work, and just make money, and just print money. Unfortunately, it's not that easy. People do trade for a living. A lot of people trade for a living, but it's not as easy as it is in the movies. And hopefully, in this, we can go over some of these questions that he's asked. Okay, so that's the question right there. Let's go into the answer. I broke the answer into several parts. Um, so here's part A. Now, first of all, covered call traders and option traders, two different things. If you go back to math class, look at the logic circles I used to, if you remember this, all covered call traders are option traders, but not all option traders are covered call traders. Covered call traders are more conservative. They are generally older, and they are newbies to options most of the time. A lot of the times, people who are upset with their stock portfolio, their stock returns, they start looking around what to do, and the first thing that they find is the covered call. And in fact, that's the way I progressed. There are a lot of educational type companies out there doing seminars, writing books, websites on covered calls, and it is easier to get into covered calls than in any other type of option trading, besides buying and selling options, which are very risky. But in terms of selling, the covered call is one of the basic trades. What is not covered in a lot of those scenarios is that the covered call is also a very risky trade, even though it's considered a conservative trade, even though brokers will allow you to trade covered calls without a lot of experience. They won't let you trade naked puts. And a covered call, in essence, is the same as a naked put. It has the same risk characteristics as a naked put, and if you would never consider trading naked puts because of the risk, the unlimited risk, then the covered call is the same thing. So another tidbit is that option trading is more than just covered calls. We, as an option seller, I do a lot of credit spreads. We do condors, we do butterflies, calendars, double diagonals, triangles, straddles. There are a whole bunch of different strategies that we use, and most of them do not require stock. The covered call is the main strategy that requires stock, and because of that, it is a highly capital intensive trade. So you have to have the stock, and then you can sell the option against it. There is something called a stock replacement call, which is um, where you buy a long dated in the money option, a call option, and then sell covered calls against that, and that is basically a replacement of the stock itself. So that is something that you can look at if you're into covered calls and you're doing covered calls, but you want to increase your returns and not have as much capital in the trade. Then you can look at having long calls, long dated calls, in the money calls that are in exchange for the stock. Okay, so let's go to answer part B. Now the qualities of a good trader. Now he's thinking about getting into it. He thinks that he's got the qualities that can handle it. He's a self-starter. Now these are some of the qualities. There are very few qualities that I just came up with off the top of my mind. Self-discipline is it's something we don't think about, but it is definitely something that every good trader must have, because the stock market will drive you nuts. It will send you to your early grave if you cannot handle the stress. If you are prone to heart attacks, and your doctors told you that you can't handle a lot of stress, then maybe this is not for you, because markets are crazy. They go up and down. Mr. Market he's a bipolar disorder guy, and sometimes he's happy and he jumps up. Sometimes he's sad and he goes down. The market goes down faster than it goes up. If you're not disciplined, if you're not having a trading plan, if you're not sticking to your plan, if you're just willy-nilly, shoot from the hip, you're going to get killed. Again, number two, the ability to stay calm. I already mentioned this. If you're not calm, you're going to make bad decisions at the wrong time, at the very wrong time. You're going to be buying at the top, selling at the bottom, and you're just not going to be a happy trader. You do have to be self-motivated, because there is no boss. There is no one telling you to go to work. If you're a trader, then you have to get up, trade your plan, stick to your plan, and you just have to keep going. You need an analytical mind, because there's a lot of data, there's a lot of numbers, there's a lot of things to look at, a lot of factors to consider when you're trading. Is there earnings coming out? Is there a Fed announcement? How has the stock been doing over time? The revenue, EPS, all this sort of thing, and finding a good stock to trade covered calls on. And then lastly, can you handle the isolation? Because you are very, very lonely when you do this. If you're trading and you lose $10,000, you go to your best friend and say, "Hey man, I just lost $10,000. I'm in the dump. I'm feeling horrible." He's not going to be able to give you much support, because he didn't lose the money. You're the one going to feel bad, and you're going to have to know how to handle it. You're going to have to know how to pick yourself up again. And unless you have a trading buddy, which I do recommend, you're not going to have a lot of interaction with others. So if you're the type of person that likes to go to work and likes to meet people and make friends, maybe this is not for you. Part C. Now, this is the math of the covered call trader. So I'm going to go over some assumptions that I had to come up with to see if being a covered call trader makes sense for this fellow. And here we go. The assumptions: number one, that he's going to be trading on stocks with dividends of at least 5% yearly dividends. That's what he's going to be owning. He's going to generate a covered call return of 15% a year. That's decent. It's not too high, it's not too low. And this is selling covered calls month after month. He's going to get 15% a year on that. He's also going to get stock appreciation of about 8% a year. And then it's going to cost him about $1,000 a year in commission. So now these are general assumptions that I came up with just to make it easier. Of course, you could trade stocks that don't pay dividends. You can go for a much higher return than 15% a year, or you can go for less, and you might not get any appreciation in your stocks at all. Your stocks might actually lose money, and 8% might be a little low. these are just all assumptions. So now with the $200,000 that he has, if we get the dividend, that's roughly about $10,000. The covered call return would be roughly $30,000, and then the 8% would be about $16,000. So he can make a total of $56,000 before commissions. And you take out commissions, he's roughly left with $55,000 a year, and that's before taxes, before any educational things that he buys, seminars, tapes, courses, whatever, any losses that he has. Any equipment that he buys, like computer equipment, or if he has to pay for an internet connection, whatever, and any software that he has to pay for. So, 55,000 if everything goes correct, if everything goes smooth sailing before taxes and all that. Now, is that enough to live off of? If you're living in LA, I don't know. If you're living in Texas, probably. You know, if you got a small family, small house, not too many expenses, no kids in college, but 200,000 might be for most people a little low to start with, and then accordingly, this is, you know, perfect scenario. Most likely, if you're trading covered calls, you want to be doing it on 2 or 3 different stocks, and they're not all going to appreciate 8% a year. So this is the hard reality of it. Looking at it, best case scenario, 55,000 before all these expenses doesn't seem like it's a lot. So either you need to take more risk, which is not advisable, or you need to start out with a lot more money. So now part D, this is a suggested plan of action that I came up with for anybody that wants to do covered calls for a living. Now, the first thing I would do, and this is my opinion, this is my experience, this is, you know, I didn't start out this way and I lost a lot of money. First thing you know, when I started in trading, I had bought some stocks and up and down and there wasn't enough. So then I looked at what else I could do and I went after covered calls and I thought they were the holy grail. You know, I was thinking, oh man, I'm going to make 24% a year doing covered calls minimum. You know, I can do a lot more than that. But I really did not understand. And the first couple months, I was up, you know, maybe 8 or 12%. And I was like, oh my God, I'm going to be rich. You know, I had all these dreams in my head of what I was going to buy. And then the next month, the market tanked. And it took a long, long time to recover from that. So these are just my tips to you. Take them with a grain of salt. Number one, you know, start with money you can afford to lose. And that goes with any kind of trading. If this gentleman only has $200,000 in his retirement, then he should not be doing covered calls. He should turn it over to a professional money manager. And I know that in the past, you know, they've lost money for people, and in the meantime, maybe you should just put it in some safe bonds or in a money market fund or something that you don't lose the money, because if that's your retirement money, you don't want to play with that. You know, because you're not going to be able to make that back if you do lose it. And with covered calls, with any kind of trading, you definitely can lose, and you can lose very, very quickly. So I advise you to start with money you can lose. Start small and to practice for at least 6 months. So even if you have $1 million that you can lose, if you think you can lose it and you'll be fine with it, you don't start with that. You know, start with 50,000 if you have $1 million, and buy some stocks that you think are safe. Do some covered calls month after month after month. See the ups and downs. You want to be able to trade in a bear market and a bull market, not just a bull market. Most people, you know, they start in a bull market and their stocks go up and they think they're a genius, but that's not reality, because when the market turns around, they don't know what to do and they lose it all. Plus, so start small. Start with what you can lose. Practice covered calls for at least 6 months before you put more money into it. Number two, covered calls only work in uptrending markets. And in those markets, you might just do better off holding the stock. Now, this is my personal opinion. There's a lot of people out there who do covered calls will argue with me on this. But the way the call is set up, you get your highest return when you get called. When your stock gets called away. Now, I myself do not like to get my stocks get called away. I like to sell the call over and over and over again, even if I don't get the max return. But still, in a bear market, you're gonna be losing too much money on the stock versus what you make on the call to make it worth your while, and you're just gonna be losing money month after month after month. So it's not a good situation. You want a stock to be in an uptrend to do a covered call on, or on a sideways pattern. But in a sideways pattern, you don't get that appreciation. So it's not the same thing. Now, number three, Not all stocks are good for covered calls, especially the ones that give you the most call premium. The reason that you're getting such a high premium for the calls is for a very good reason. It's called high risk. I'll tell you a story. A few years ago, I started doing covered calls on LVS, Las Vegas Sands, the casino company. The calls were giving me a return of, I think it was like 8% or 12% in a month. Now that is phenomenal, and you normally don't get that in a covered call on a monthly basis. So I really like the stock. I didn't think it was going to go down. It had already gone down a lot. The volatility was high in the stock, and I thought that's why that's why the calls were giving such a good premium. But I bought it, I think around $17 was the price of the stock, and then that stock tended to drop all the way down to $2. So yeah, I got a high premium for my calls, but they did not even come close to making up for the big loss that I took on the stock. Now, I did hold on to the stock, and I did keep selling calls over and over again, selling puts, doing other strategies so that I could make some of my money back. But the only reason I even got saved on that was because the stock did not go into bankruptcy and because they did come back. So um, thank God that the stock came back and went up higher than I bought it for, and that's what saved me on that position, not the covered calls. Part D continued. Number 4, stick with the same stocks month after month. This will lower your commission and help you understand the way the stock moves. So what I'm saying here is that you don't want to do covered calls on Apple one month, Google the next month, Cisco the next month, McDonald's the next month, and just keep going from stock to stock to stock. Look, you don't need to go find covered call stocks every month. What you need to do is stick with a short list of maybe 10 stocks that um, you watch, you know how they move, and this is the same for any option strategy, really. Um, if you know how they move, then you can play it in a way that is safe. If you keep going from stock to stock to stock just to get high premiums, then you're not going to know what's coming up. You're going to miss something, and you're going to get whammed. So number 5, dividend stocks are good candidates. I think dividend stocks are excellent for covered calls. I think any of the Dow 30 are excellent for covered calls. The larger the company, the better, because the less the stock will move. And the less it moves, the better chance of your calls expiring worthless. Number 6, have a plan of what you're going to do when the stock tanks. Are you going to buy more? Are you going to sell out? Are you going to hold and pray that it comes back? Basically, this is your trading plan. You have to know, okay, I'm going to make X percentage on this, so I don't want to lose more than X percent or Y percent, however you want to play it. But you cannot just buy a stock and think that, okay, even if it goes down, I'm going to still sell covered calls against it over and over again, and eventually it'll come back. Because what happens is, if you have a $50 stock, if you sell a call, you might get $1 for it. But if that stock drops to $25, you're not going to get that dollar on the calls. You're going to get maybe 30 cents or 40 cents. So you have a loss on the position, but you're not going to be able to get that money back because the call premium will also have dropped. So in my opinion, the best thing to do is if the stock is dropping, get out. Buy back your call, sell the stock, just get out of the position, look for something else. And number 7, reinvest your gains for faster growth. Now, if you're doing this for income, take your money out every month because you need to. But otherwise, if you're playing small, if you're just growing your nest egg, then keep putting the money back in. Buy stocks, buy your favorite stocks on dips and keep growing your portfolio that way. Part E, who to trust. Okay, so towards the end of the question he asked, who should I trust? Who do I talk to about this? How do I learn how to get into options? And this is a very good question. It's a very tricky question. Who to trust? There are millions of people out there that want your money, that want you to manage your money, that want to show you what to do with your money, that are willing to tell you what to do with your money. I have a financial planner myself with a very large company, and he considers himself an expert in financial planning, in what to do with money, in retirement planning. But the only problem is he's not retired. The only problem is that he's still working for a living. So I would rather take my advice from somebody who's actually doing what I want done. You know, um, if I wanted to learn how to surf, I'm gonna go find somebody who's a surfer. I'm not gonna go find somebody who's watched movies on surfing because that guy's never been in the water. So, number one, who to trust? You trust yourself. Mainly, number one, you gotta trust your gut. If something does not sound right to you, stay away from it. If it sounds too good to be true, stay away from it. If your gut's going to tell you, even if something sounds awesome and makes sense, there's proof behind it and everything, but if your gut just doesn't go with it, then ignore it, because the market is going to be there forever. It's going to outlast all of us. You don't have to trade today. There's no opportunity that will make you, force you, that you have to put your money in today or you're going to miss it. There's another opportunity tomorrow and every day after that. So there's no rush. Do your homework and find out exactly what you're doing before you do it. Now, number two, trust those you see doing what you want to do, not just teaching. So if you find somebody who's a teacher, they might have a lot of good strategies, they might have a lot of good things, but they are not doing what you want to do. So you got to take that with a grain of salt. Now, I used to go to, when I first started, I went to several of these seminars that teach you how to trade options, stocks and options, and looking at the different indicators and red arrows and green arrows and all that stuff. And these events are normally on a Saturday, Sunday. And they start at 8:30 in the morning or 7 in the morning, 7, 8 o'clock in the morning. I mean, super early in the morning. And the guys who are in the front of the room teaching the seminar consider themselves to be traders. And that's what they say. They say, I'm a trader, I'm doing really well, and I've been doing this for years and trying to impress you. But my question always is if you're such a good trader, why the heck did you have to fly all the way to my city, get up at, who knows when, 6 in the morning, to come talk to a bunch of about trading? You're working for this large company, you're getting paid. If you were such a good trader, why do you need this weekend job? Why are you moonlighting? And basically is what I'm asking, and they never answer that. They never have, you know, a legitimate excuse. That's all they try to do is, oh yeah, I'm a trader, but they're not, they're salespeople. So be careful of who you listen to. Study, practice, watch, ask questions. There's a lot of information in your library. There's a lot of information online. There's a lot of information available from your broker. If you have a good broker, they will have a large library of webinars and seminars and study materials that you can read and watch and listen to, that you'll never get through all of it. Now, especially with the internet, I mean, it's out there, it's free. Just watch it and learn from it. Ask questions. There are forums online you can ask questions to. You can join a service like mine where, I actually do trade, and you can ask questions and say, hey, I'm looking at this covered call and I'm looking at this and that, and what is it that I'm not seeing, and I can't give you specific information to you, but I can tell you if it's a trade that, I might look at, or if there's something you're not seeing, I can tell you that as well. So trading is a skill. It's a profession. You're not going to learn it in a couple months. It takes time, dedication, lots and lots of effort. It's not a part-time thing that you can learn right away. You have to really study it. You went to school, whatever your profession, whatever you're doing right now, you didn't learn it in a couple days. Um, you know, Even if you go to McDonald's, if you work at McDonald's, it still takes at least a week of training to learn how to flip the burger, to make the fries, to pour the drinks. This is something that can make you an unlimited amount of money if you do it properly. If you do it well, people will flock to you and throw money at you and say, please, please do the same for me. And you need to take it seriously. You went to college to learn whatever you're doing. Well, consider your first few years of trading as your college, in trading, as your education, and you're going to lose money. That's part of the tuition process. It just happens. And so, I haven't really come across too many people that started trading and made money right away. I know my wife's uncle, uh, he got into trading. I introduced him to trading, and he didn't take my advice. He jumped into it, and he started trading weekly options right away without too much experience. He thought he understood it because it's a very simple concept about how to sell weekly options, but how to deal with it is not that simple. But he jumped into it, and for a while he was doing very well. He would call my wife 2, 3 times a week and talk about how well he was doing and how much money he was making, and after maybe 4 months, the phone calls stopped coming. And we finally found out that he didn't want to talk about it anymore, and eventually he did admit that he lost most of his money, and he's not trading anymore. So that's why I say start small, practice paper trade if you can, um, and just be careful out there. If covered calls it's a good thing to start with. And then once you get the hang of it, then you want to move on to something better, something, maybe credit spreads or condors or something like that you understand better. But even if not, buying good quality stocks that pay dividends, selling options on them, selling calls, selling even puts to buy more. You stick with this, and you can do very well, and you can definitely beat the market. You can take care of your own money, and if anything happens, you can just jump out of the market. It's not like with the mutual fund where you're stuck there and you're just holding it. You don't know what's going on. So trading for yourself is highly. I love it. It's wonderful. It's for me. It fits me as a profession. Um, and it might fit you as well, but it does take a lot of time, a lot of effort, and money. It does take some money to get started and learn. So those are my answers to Robert's questions. I think it's Rob, and I hope that this helped you. Again, if you have any more questions, please give me a call or email us. And if there was anything that you disagree with in this video, then let me know that as well, and we can talk and converse, and maybe I can learn something from you. So let me know. Thanks.